The man, identified as Mr. Lowden, made $1.7 million in profits after buying and selling stocks in a company that his wife's employer, BP, acquired, prosecutors said. Federal prosecutors said that over 7 weeks, Mr. Lowden methodically bought stock in a company that was about to be acquired by BP where his wife worked. As per the case, Mr. Lowden pleaded guilty to insider trading after he was accused of making $1.7 million in illegal profits by purchasing and selling stocks based on his wife's work conversations, which he had overheard while she was working remotely at home. Interestingly, a thorough review of Mr. Lowden's wife's texts and emails conducted by BP found no evidence that she knowingly leaked the information or knew about her husband's trading. The saga took a turn when, after Lowden's confession, Lowden's wife moved out of their house and generally ceased all contact with Lowden, as the complaint stated. In addition, Mr. Lowden's wife initiated divorce proceedings in June 2023. Now, Mr. Lowden is facing a maximum sentence of 5 years in prison and a possible maximum fine of $250,000, according to prosecutors. Mr. Lowden also agreed in the plea agreement to forfeit his $1,763,522 profit to the United States. His sentencing is scheduled for May 17th. The federal prosecutors released this information on Thursday. Let's take a closer look at Tyler Lowden, the man behind the $1.7 million insider trading scheme. A native of Houston, Texas, Lowden was known in his circle as a savvy investor with a knack for numbers. He held a degree in finance from the University of Texas and had built up a successful career in investment banking. Despite his professional accomplishments, Lowden led a relatively low-key life. He was married to a mergers and acquisitions manager at BP, a British oil and gas company. Their relationship was seemingly normal, with the couple often seen together at social events and family gatherings. Little did anyone know that their conversations at home would lead to a scandal of such magnitude. Lowden was described by his friends and colleagues as a quiet, disciplined man who always kept to himself. His wife, on the other hand, was known for her ambitious nature and her dedication to her work. Their contrasting personalities, however, did not prevent them from leading a seemingly harmonious life together. Little did anyone know, beneath the surface of this ordinary life, Lowden was harboring an extraordinary secret, a secret that would not only shatter his reputation, but also his relationship with his wife, and potentially, his freedom. Stay tuned as we delve deeper into this intriguing story of deceit, insider trading, and the fallout that followed. The man, Tyler Lowden of Houston, bought 46,450 shares of stock in the truck stop and travel center company, Travel Centers of America, after he heard his wife discuss her employer's proposed acquisition of it, according to a complaint filed in the Southern District of Texas by the U.S. Securities and Exchange Commission. Mr. Lowden's wife, who is not named in court documents, was a mergers and acquisitions manager at BP, a British oil and gas company, the complaint said. On February 16, 2023, Travel Centers of America announced that it had agreed to be acquired by BP, sending its stock prices soaring by 70.8%. Mr. Lowden immediately sold all of his stock, which he had bought without his wife's knowledge, according to court documents. Voiceover. As we trace the roots of this scandal, let's delve deeper into the acquisition that sparked it all. BP, a global powerhouse in the oil and gas industry, set its eyes on Travel Centers of America, a prominent truck stop and travel center company. This move was part of a larger strategy to diversify and expand their reach in the energy sector. In the heart of this acquisition was Mrs. Lowden, Tyler Lowden's wife, an astute mergers and acquisitions manager at BP. Unknown to her, her professional moves were being closely monitored by her husband, leading to a series of unfortunate events. On February 16, 2023, the announcement of BP's acquisition sent ripples through the stock market. Travel Centers of America's stock prices skyrocketed by a staggering 70.8%. A business move that was meant to be a game changer for the energy sector unknowingly set the stage for a major scandal. Next, we'll look at the legal consequences that followed this high-stakes game of insider trading. Mr. Lowden made a terrible mistake in judgment for which he has taken full responsibility, Mr. Lowden's lawyer, Peter Zeidenberg, said in an email. Alamdar S. Hamdani, the U.S. Attorney for the Southern District of Texas, announced on Thursday that Mr. Lowden had pleaded guilty to securities fraud. Mr. Lowden also reached a partial judgment with the SEC, which had filed civil charges against him. BP declined to comment. Let's follow the trail of the investigation that led to Mr. Lowden's arrest. In the wake of suspicious trading activities surrounding the BP's acquisition of Travel Centers of America, eyebrows were raised. The U.S. Securities and Exchange Commission, alongside the Financial Industry Regulatory Authority, started to dig deeper. They scrutinized trading records, traced the money flow, and began to connect the dots. As they pieced together the puzzle, a pattern emerged. The timing of Mr. Lowden's transactions, his proximity to the insider information, and the sheer volume of his purchases raised red flags. Further investigation revealed the damning evidence. Mr. Lowden's individual brokerage account and his Roth IRA were being used to methodically buy up Travel Centers of America stock. The pieces of the puzzle fell into place, pointing to a clear picture of securities fraud. The evidence was irrefutable, leading to Mr. Lowden's arrest. A meticulous investigation had unearthed a criminal, and justice was on the horizon. Mr. Lowden's wife had started to work on BP's proposed acquisition of Travel Centers of America in early 2022, the SEC's complaint said. She and Mr. Lowden, who is employed at a publicly traded company, often worked in home offices within 20 feet of each other. Federal prosecutors said that Mr. Lowden either knew or was severely reckless in not knowing that information he overheard or was told about BP deals was confidential. Mr. Lowden began buying Travel Centers of America stock on December 27, 2022, and over the next 7 weeks, the complaint said, he methodically sold approximately $2.16 million in positions from his individual brokerage account and his Roth IRA to purchase more of the company's stock. He did not tell his wife, federal prosecutors said. Voiceover. As we delve into the aftermath of this scandal, we see the ripple effects it had on those involved. The news of the insider trading scheme hit like a bombshell, leaving a trail of destruction in its wake. Mr. Lowden found himself at the center of a legal storm. The man who once held an esteemed position in a publicly traded company was now a pariah, facing serious legal consequences. His reckless actions not only threatened his own freedom, but also put his assets and reputation at risk. But the fallout didn't stop there. His wife, who had been working diligently on the BP acquisition, was blindsided by her husband's actions. Her career, once on an upward trajectory, hit a sudden roadblock. She was placed on administrative leave, her integrity questioned, and eventually terminated. The shock and disbelief were evident in her reaction, a life turned upside down by a loved one's deceit. The public and business community, too, were left reeling. Confidence was shaken, trust eroded, and the scandal served as a stark reminder of the dangers of greed and unethical behavior. The scandal became a topic of heated debate in boardrooms and households alike. In this scandal's aftermath, we see a stark illustration of how one person's actions can have far-reaching consequences, a chilling reminder that trust, once broken, is not easily regained. After the merger was announced publicly, the Financial Industry Regulatory Authority, a private business regulator, requested information from BP in late March 2023 about the deal, the complaint said. Mr. Lowden's wife told her husband that a former colleague who had worked on the acquisition had complained to her about BP's lawyers, who were asking for personal information. Mr. Lowden asked his wife if other employees would be under similar scrutiny, and she said that they would. A week later, Mr. Lowden told his wife that he had bought shares of the stock before the acquisition, but he did not say how many shares or how much money he had made, the complaint said. Mr. Lowden's wife was stunned by this admission, according to the complaint, and told her supervisor. She was placed on administrative leave and eventually terminated.